escalating protests in Hong Kong certainly weighing on U.S. markets today. Let's talk about what happened in Hong Kong overnight. Hong Kong International Airport, one of the busiest in the world, canceling all of its departing flights for the rest of the day, citing serious disruptions, stranding thousands of passengers. This followed dozens of arrests after another bloody weekend of clashes across the city. Chinese authorities now condemning the violent protests as, quote, deranged, adding they exhibit, in their words, the first signs of terrorism. Joining us is Ryan Patel. He is a Drucker School of Management Senior Fellow at Claremont Graduate University. Ryan, it's interesting. These protests have now gone 10 weeks. We hadn't really seen an impact in the U.S. markets until today. What's changed?
Well, I think it's the demonstration. When you close out the busiest airport in the world, 70 plus million visitors, it catches everyone's attention. But what you said, it's been going on for 10 to 11 weeks. Businesses actually have been paying attention. Disney, the hospitality sector, especially the Marriott CEO, they've all kind of come out and said that this is going to have an effect further down the road, but hasn't really been on top of news until now. When you disrupt something like this at the airport demonstration, I mean, it's just not businesses, it's visitors, tourism. It starts to kind of bleed into other places, puts a lot of eyes into what's going on. And then when China makes statements like this, it gets multiple countries paying attention to what's going to be next.
No question we saw significant escalation this weekend, not just because of what happened at the airport, but because of that rhetoric that came out of Chinese authorities. They also talked about needing to clamp down with an iron fist. These were their words. You look at what's happening right now in the region. We've been focused a lot on the U.S.-China trade issue. Is this what's happening in Hong Kong, these protests, is that a bigger risk?
Yeah, everybody should be paying attention to this right now. This potentially could be even bigger than the U.S. and China. And you know why? It's because it involves Europe. It involves South America. Hong Kong is a hub for multinational countries. And take away the business perspective and then talk about the relationship, the geopolitical relationship. If China chooses to come into this, that will probably make the U.S. and maybe certain other countries act. How does that do in the economy, economically, and the trade relations with that? I mean, this is where, by them having that rhetoric over this weekend, sends a pretty strong tone to multiple countries, even businesses, on how they're going to have to react if some other countries get involved.
And we are seeing specific stocks get hit on the developments in Hong Kong, particularly in the luxury sector. We're looking at Tapestry, Capri Holdings, Tiffany. Some of these names, though, specifically are related to a political issue, one being Coach and the shirt that they had that specifically listed Hong Kong and Taipei, Taiwan, instead of kind of lumping them together in mainland China. I mean, we've seen this kind of response from the Chinese side before, saying that, look, Hong Kong and Taiwan are part of China. I'm wondering if you think this time around is different, because we've seen companies like Marriott, like the airlines last year, eventually rebound after basically towing the line of the Communist Party.
Yeah, I mean, I think this is, for me, you would think that there's a lesson to be learned. Either you're making a statement or you're not. It's either or. And obviously, those retailers pretty much stated that they apologized. And so, yeah, they're going to rebound. And the timing of this is probably not helpful. But for me, it's like you would think that there's some lessons learned. Yeah, you can make mistakes. These companies, Coach, they've made mistakes in the past. But this is at the time where it's tightened relationship between the U.S. and China and the Hong Kong. You would think that there would be a little bit more carefulness around when you put kind of these kind of rhetorics behind there, regardless if it was on purpose or not.
One of the companies that has really been caught in the middle is Cathay Pacific. And on that front, we did hear from Chinese authorities saying that, number one, any employee who takes part in the protest needs to be removed. But number two, the Chinese government wants to screen crew members that actually operate in flights that go to mainland China. And yes, this is a specific company based in Hong Kong, but I'm wondering if this is the kind of thing we're likely to see with other multinational companies. Is that where this is all headed?
Well, that's what I think the Chinese wants to go ahead. And Cathay Pacific is right now headed in the wrong direction, caught up into this. I feel very poorly for the company and kind of obviously for his employees, because they are in a rock and a hard place right now on what to do. Their stocks getting pummeled. They are losing, cancellation of flights. They're the main character out of Hong Kong, and the revenue stream could continue to head down when they have this kind of regulation going down that path. So I don't see the multinationals, other multinationals, like you were mentioning, American and these other airlines kind of give in to this unless there's some pressure. Right now, there isn't very much pressure around other companies feeling that. But I mean, that's kind of what I think the Chinese government wants to have.
And finally, Ryan, when you look at the Hong Kong exchange, they changed their listing rules last year to try and attract bigger names, particularly in the tech sector. And as we've seen this tension between the U.S. and China, a lot of these companies have seen Hong Kong as the destination for an IPO, given that they're not as welcome in the U.S. right now. How is that likely to change as we see these protests drag on?
Well, I would tell you this. Right now, if I was sitting on any of those companies that are looking to go to IPO, unless they're really for sure and they're bringing their own main attention, their star attraction behind their stock to go, then go ahead and IPO. But I would tell them not to. Right now, this is if you value a stock price to go up when you IPO and then you're going to have a great quarter 2, quarter 3 run, like I don't know how you can make that actually going to happen. You're better off let this die down. You're not going to take the headlines away from what's going on, and you're walking into a pretty hard situation. You're better off holding the IPO going out next year. And I'm not the only, I'm not the only one saying this. Many companies are thinking about why would they enter a time when their stock's going to get hit for no reason or for no fundamental reason.
Okay, Ryan Patel, some good insight there. Appreciate your time today.
Thanks for having me.